Hey, it's Mike Cambright with FlipNerd.com. Welcome back for another exciting expert interview where I interview awesome guests from the real estate investing industry to inspire you and help you learn. Just a quick reminder of our upcoming REI Power Summit, where we have over 50 speakers. It's going to be a fantastic event, 100% virtual and online. Check out reipowersummit.com to learn more. For today's show, I'm joined by Joakim Mortensen. He's a managing director of Colony American Finance, a leading provider of financing solutions to residential real estate investors. Colony American is also a sponsor of this show, so we're very excited to have Joakim here with us today. Today we're going to discuss how the financing industry has changed recently to really dramatically benefit real estate investors. Whether you're fixing and flipping properties, or you're buying and holding, or you're looking to refinance your rental properties, if you're not aware of how much easier it is to get financing for your business, you really need to watch this show. It's always been a big hurdle for real estate investors to get access to capital, and no longer is that an excuse. So we're excited to have Joakim here with us today. Before we get started, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days with rates starting as low as 9%. For more information, call 888-296-1697. B2R Finance makes loans tailored specifically for rental investors. They can help you unlock equity from existing properties so you can get cash out to grow your rental portfolio. That's huge and opens up lots of opportunities previously not available to rental investors. Need a loan? Call 855-819-4412 or visit b2rfinance.com today. AceBusinessFunding.com can help you get up to $150,000 in revolving credit lines to fund your business with rates as low as 0% for the first 12 to 18 months. Use the funds for startup costs, marketing, inventory, or almost anything your business needs. If you can't get funding, you don't pay a dime. Get funds for your business today at acebusinessfunding.com. We'd also like to thank Colony American Finance, National Real Estate Insurance Group, and virtualstaffnow.com. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Joakim, welcome to the show.
Thank you very much, Mike. Good to be here.
Yeah. Glad to have you on. So it's really been interesting. I don't know if you know much of my background, but I started real estate investing in 2008 when financing was impossible to get. We literally would go to banks and sometimes you would really hear the word evil. Like, no, we don't do that anymore. Real estate is evil. And over the years, these lenders came in that just loved real estate. And so it's a very different time today than it was, even just a few years ago, right?
Absolutely. Yeah, no, it's certainly interesting to follow how this specific asset class, as we like to call it, where you have residential assets, whether it's being acquired or it's being held for long term. And obviously us as lenders have kind of seen a void and an opportunity in the market that we then are providing liquidity to primarily residential investors.
Right. Before we get started, maybe you could tell us kind of your background and how you got into the space. And then I want to talk about large institutions like yours that started as more of kind of the hedge fund acquiring property type and then kind of morphed into lending. But maybe you could start by just telling us about your background.
So, Mike, I've been in commercial real estate for most of my career. And back in 2011, I had the opportunity to help a hedge fund get financing. They had acquired a significant single-family portfolio in Florida and was in need of getting it recapitalized. And that kind of led me to Colony American Finance. I knew some of the senior people there and joined them in June of 2014.
Okay.
And obviously it was exciting to join the Colony brand because Colony American Homes had just finished acquiring 20,000 single-family homes that they are then renting out, and Colony American Finance was then a spin-off, setting up a finance company to provide financing in the single asset, single family space, and kind of provide liquidity to residential assets.
Sure. So there was this time, just not that long ago, maybe a year and a half ago, when a lot of real estate investors were clamoring that the hedge funds are killing us. They're, buying properties, they're driving prices up, things like that. And then all of a sudden, those very competitors, if you will, became their friends because they started to lend to them. I mean, just talk about that transition of going from buying homes to effectively lending to, everybody else.
Yeah. So what's interesting about it is that as everybody got smarter about this asset class, rating agencies actually did a study on some of the opportunity, and currently there's 15.4 million rented residential assets. And if you add up the 20 largest buyers or the biggest funds, they don't even control 1% of this.
Right.
So needless to say, this is an enormous industry with tremendous opportunity. And what we're doing as lenders is obviously providing liquidity and institutionalizing the asset class. So it's very exciting to be part of this new venture.
Sure. So talk a little bit about how, what's happening right now is, you guys and some of your competitors, you see a lot of people that are effectively competing for the real estate investors' business now. And what we've seen is you guys are moving closer and closer, and you may already be there, to a single home product, to lower rates, and things just appear to continue to get better for real estate investors over time. Can you maybe talk about, what's been happening and where things are going?
Yeah, absolutely. And again, it's part of this, being part of this has driven liquidity. Anytime you can drive liquidity to a relatively inefficient market. And I think largely before that, it had been what we define as mom and pop investors in very local markets. Is now that it's becoming kind of a new industry, then you're seeing bigger players, you're seeing more liquidity, and obviously I keep on using the term institutionalizing it, but it's part of driving this new asset class to a recognized commercial real estate industry. Right.
And, what a lot of folks don't realize, and you may know the statistics better than me, but I think around, this is including multifamily and single family as well, but around 1 in 3 homes in America, I believe, is actually owned by a real estate investor. Does that sound about right?
Yeah, probably. I would hate to be the statistician, but it does sound like accurate, because this industry has been around forever.
Right.
It's just historically been very, very local, and it's been pretty much the mom and pop or the local investors who have been active in this space.
Right. So can you talk a little bit about how, with Colony American coming into the mix and lending to investors, just talk about how you benefit real estate investors these days?
Sure. Part of it is, if you look at the historical guys who would buy and renovate or buy, fix, and flip, as we define it, is now we're giving them 2 options. We're giving them the option that if they want to hold on as a long-term investment, we can provide them low-cost, meaningful debt that will allow them to not having to go out and sell it in order to realize their profit. If they believe in meaningful appreciation and rent growth, then that would suggest that they should hold on to that investment.
Right.
So from that perspective, we have opened a brand new avenue for the traditional investors. On top of that, our second line is what we call an acquisition line of credit, or a bridge loan, which is basically a line of credit that allows the investor to lever up their acquisition and obviously getting more buying power from having access to credit.
Yep. And maybe you could take a few minutes to talk about kind of trends that you're seeing, because I know it's obviously very market specific, but in a lot of markets, like I'm in Dallas, there's a lot of markets, California markets, a lot of people feel like the markets are, getting a little bit overheated right now in some areas, particularly for, let's say, buy and hold investors.
It really depends what your objective is. If you're a long-term holder, and you believe in, as I said, long-term appreciation, not necessarily having to hit it out of the ballpark, but if you believe that real estate will appreciate and that there's going to be rent growth in the market, that's again something that would suggest that you should hold on to this long-term.
Right.
If you don't believe in that thesis, then obviously you're probably better off selling it.
Right. And do you see, are there any certain parts of the country that you see that are overheated more than others right now?
I'm located down in South Florida, and there's obviously been a lot of talk about, South Florida was one of the markets that got hit the hardest.
Sure.
But you've also seen great appreciation in the South Florida market. but you also have a huge influx of foreign nationals, foreign buyers,
Right.
and a lot of Americans still like to have a second home or at least go visit South Florida or Florida in general.
Yeah. Yeah. And can you talk about, I guess, how you differ from other types of lenders out there? There are obviously hard money lenders. There are kind of local and community banks. Just talk about how specifically, Colony American is different, I guess, than other types of lenders that are out there.
Sure. So the senior management team all came from either the residential or the kind of acquisition space and finance. So it's a nice combination. I think we have a very pragmatic approach to how we underwrite and look at deals. We are asset-based lenders, so our main source of repayment is going to be the rental income from the properties. And again,
Sure.
I'm talking specifically about term. We have a good way of looking at our underwriting where we apply meaningful expenses and obviously to generate an NOI, but we are less interested in the sponsor and their ability to pay back, where we just, again, asset-based lenders, so cash flow from the properties is going to be key, and that's pretty much what we solely focus on.
Right, right. And I know, comparing to community banks, I've done a lot of work with community banks, is they usually bump up against some lending level. Like if they like real estate, if you find them, then they're usually smaller banks where you walk in and you may talk to the president, but they're limited at how much they could lend you. So they've got a lot of restricted resources.
Absolutely. And we're defined as a non-regulated institution. So we don't have some of the same restrictions that banks have. So we don't have a legal lending limit that we can bump up against. And certain regulatory requirements is also something that we don't necessarily are running into as well.
Right, right. Well, can you share, where do you think, where do the kind of the institutional players, where do things go from here over the next couple of years?
Well, I still think we're very early into this, into the cycle, if you will, where I feel like there's still going to be great buying opportunities for investors. And let's remember also that many of these investors that we actually provide financing to are all very local. So that means that they don't necessarily, obviously the larger investors buy, but they tend to be very local, specific markets that they know very, very well. Mm-hmm. And that's obviously one of the key drivers, is we want to see that they have great property management experience and that they understand the market that they're buying in.
Right, right. And do you see, in terms of kind of an institutional movement, not just from the lender side, but from a buyer side, whether it's retirement account, retirement funds, or other people, do you see them, anything going on there in terms of, I guess, individual buyers, individual investors like me, moving into the space that would, continue to either drive prices up or cause more competition, or what do you see there?
Well, I think that a lot of people like this real estate as a long-term investment. You obviously look at the stock market, and it's incredibly volatile. And I think that a lot of people got burned. A lot of people are scared about the volatility. You don't necessarily have that in the residential real estate, and I think people like that, the brick and mortar aspect of it. And what's also interesting is that we do finance foreign nationals, and a lot of foreign nationals have looked at residential real estate as a safe place and also have a dollar-denominated investment. So from that perspective, we are also providing liquidity to foreign nationals, which in certain markets have been very big for us.
Okay. And can you clarify again? So you fund both. Are you typically set up where you're providing with folks get financing through, lines of credit? Is that typically how you're set up?
Yeah. So we have the what we call the bridge, or the acquisition lines of credit, which is typically to increase people's buying power. A lot of them buy, then rehab, and then stabilize. And what I mean by stabilize is that they actually rent it out. And then once they have a meaningful pool, they would then come to us and get what we call a term or permanent financing, where we can provide fixed rate 5 or 10 year term on a 30-year amortization. That allows them to build out their rental portfolio. So it's kind of, two punch, if you will. We have the bridge where we provide the acquisition. Once it's stabilized, then we allow them to recapitalize, take out their money, and then go do it all over again with the lines of credit.
Okay. And you also provide financing for folks that simply want to, maybe they already have a large portfolio, that if they want to effectively refinance that. Is that right?
That's right. And within the first 12 months of me joining Colony, everything was pretty much a refinance. What you are seeing now is you're actually seeing a trend where people have aggregated a portfolio of 20 or 30 homes, and we've actually seen pools start to trade now where we see consolidation in the industry. And I think we're going to continue to see that going forward.
Yeah. Do you see, and some of the institutional players that bought a lot of property, some of the hedge funds, some of them have actually been selling off, right? Some of the smaller ones.
Yep.
And what do you think is going?
You've also seen some of the bigger ones where they have just bought a tremendous amount of properties, and they are now starting to make strategic dispositions.
Okay. And what are some examples of those things that you've seen that are going on? Is it selling out of specific markets? Is it certain kind of price points, or what is it?
Yeah, I think since property management is key to this, I think you see where people have great concentration, they can get management efficiencies, or they feel like they have too much exposure, or they are in areas that doesn't necessarily fit into their investment profile, or they feel like they've got the appreciation. So there's a whole variety of things or reasons why you would trade out or sell. But it's interesting to see how we are seeing a pretty big uptick in consolidation, and now we're actually financing acquisitions as well as refinancing.
Yep. Okay. And you talked a little bit about how you're more asset based. Can you talk about, for folks that are listening right now that may think, I don't know if I qualify, or can you kind of talk a little bit about, I know you don't look as much at the person you're lending to as the asset as well, but can you talk about the types of folks that you like to work with, and maybe kind of who qualifies and who doesn't typically?
Yeah, I think we're very easy to work with, and I wouldn't want people to be intimidated by not qualifying. So basically what we're looking for are guys, if we talk about term loan, is that you have a portfolio that you've aggregated and want to recapitalize, take out some equity. And basically we want to see that they know what they're doing in terms of property management, or that they have a third-party property manager in place. And then, what's the next step? Do they want to go ahead and acquire more properties? Then we can offer them the line of credit. And basically, we want to make sure that the assets are good assets, they're in good locations, and that they produce a meaningful income, so we can give them a good loan to value and a good long-term solution on the financing.
Great. And maybe could you share some kind of trend information on what, I know this is going to differ greatly by market, but what you're seeing just generally speaking with rents for the past couple of years. I know with my portfolio, we've seen them going up. Every time we renew a lease, we're raising the rents. Where do you see things going from here?
Yeah, so it's interesting because obviously we keep on hearing we're record low home ownership, meaning the people actually owning the home.
Right.
And then we've also certainly seen some reluctance from young people when you talk about the household formation, that people are much more likely to rent right now than they actually buy, because obviously there was a lot of people who, during the crisis certainly lost their home and had a really bad experience owning real estate. And again, that's probably trickled into us seeing that there's tremendous demand for renters. And the other thing I always like to point out as well is that if you give a young family the option of renting a house or living in an apartment, I think most people want to live in a house.
Right.
All those things actually kind of point towards that you are going to probably continue to see meaningful rent growth, whether it's 1, 2, or 3%. But if you look at that over a 5 or a 10-year trend, if you can bump it a couple of percent a year, that actually turns into real value at the end of the long term.
Sure, especially if you are able to. I know that believe you said you offer rates fixed for maybe as long as 10 years, right?
Correct.
Yeah, that's another huge change that's happened in the past few years. I know a lot of the local lenders that I've worked with, they were at maybe 5-year fixed, and then most of them have moved down to 3 even. So to be able to lock something in for 10 years is awesome.
A lot of these guys view this as their retirement, just because it's something that, again, it's an asset class they can relate to. They believe in this. And the second we refinance them, then they're going to go buy more properties. I mean, that's the interesting part about this investor, is that they're very loyal to this asset class, and we see that the second we recapitalize them, they're going to go deploy that capital again.
Right.
So it's great for us because we set up long-term relationships with all these investors.
Right, right. So, Joaquin, where do you, can you talk a little bit about how maybe Colony American is different? There's obviously you have some competition in the space. How are you guys different?
Yeah, I think we take a very pragmatic approach to underwriting. We are cash flow lenders, so our key driver is going to be the rental income in the properties. I also think the people who work with us will can attest to that we have a very streamlined underwriting process. We're very accessible. It's the same underwriting kind of working with you through the whole process. And typically, our originators are also heavily involved in the underwriting, and the investors have access to the whole team at all times. So I think we're very focused on that and try to create a very easy, good experience for the borrower.
Awesome, awesome. So what have we not talked about yet? Maybe you could take a couple minutes and just wrap things up and tell us what investors should expect going forward, and how they might benefit by working with you.
Yeah, listen, I think this industry is going to continue to evolve, and I think we're going to see 5-10 years from now, it's going to be just as recognized and just as efficient as multifamily or office or hospitality. So I'm excited about being part of this creation of a new asset class that's still very, very young in its infancy. And obviously, as an industry becomes efficient, then we're also going to see more competition. We're going to see more loan products, and it's exciting to be part of.
Great, great. Well, if folks want to learn more about you guys, or maybe inquire about lending, we'll add a link down below here. And of course, you have some ads on our site because of your sponsorship, but maybe you could just tell the listeners out there where they can go.
Yeah, so obviously we have a really great website, colonyamericanfinance.com, where you can plug in your contact information, and within 24 hours we have someone reach out. There's also an 800 number where you can call in and kind of describe the loan product and what you're looking for, and then immediately we'll assign you to a regional originator, and then start helping out to see if there's any way we can work together with those investors.
Fantastic. Well, thanks for joining us on the show today, Joaquin. Thanks for being a sponsor of the show. We definitely appreciate you. And for those listening, we'll add a link. You can go check out Colony American Finance and fill out a form to kind of start the process to see if there's a fit there for you to refinance your products, or maybe help fund some of your upcoming growth. So, Joaquin, thanks again for joining us today.
Mike, thank you very much for having me. I really enjoyed it.
Good to see you. You too. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.